My guest today is Colin Keeley, co-founder of holding company called Verve, where they acquire wonderful SaaS companies. Thanks a lot for coming to the Holdco Builders podcast, Colin.
Thanks for having me.
Before starting and operating a holding company, could you please walk me through your journey from university all the way to the wonderful world of SaaS companies and then eventually co-founding Verve?
So, grew up in the Chicago suburbs, went to school in Minnesota at Macalester College, majored in econ and math, played basketball there. Got in with a serial entrepreneur that was doing another startup. So we did a TV and movie recommendation company for like 3 years, so raised $1.5 million, something like that. Didn't have enough traction, shut the company down, did a bunch of other things. I had a lot of failures and some small successes. So I had a software marketing agency. I started a company that did stretchy jeans for guys. I did a sharing economy startup. Through that process, I ended up in business school. So I went to the University of Chicago. I got into venture capital, and that was doing Series A deals. So like $1 million ARR software companies often, and then like a startup studio. So a few times a year, we try to spin up new companies. And through that process, met my partner, who's the tech side of Verne. You do a lot of companies and you have the capital behind you, you have the experience of doing it, and it's just hard. It's really hard to start a new thing, to take it from 0 to 1. And we discovered you could just buy something that's already working. And so that's how we did our first acquisition, which was maybe like 4 years ago. And that was kind of the birth of Verne.
Okay, and maybe you can share more about this first acquisition, like how did you find the company? What about capital? Did you raise it? Did you use your own savings?
Yeah, it was a smaller company. So it was 6 figures in ARR. It was a payments app. We found it on Acquire. So most people find their first business on a marketplace of sorts. That's where we found ours. It's probably the best for smaller software companies still today. The plan was just to use my own money. And then I brought my partner, who is he's effectively a CTO by profile. And he worked with me as a partner at the venture capital fund. At the time, we didn't know anything worked. So we were like Googling, how do you do these legal docs and everything? We brought in our small business attorney who helped us out. We were super simple. We were very aggressive on seller financing requests. It was like 50% seller financing or in that ballpark. Didn't know anything worked, but did an awesome deal with an awesome guy, a serial entrepreneur. He was starting at the time a electric boat company. So trying to do Tesla for boats. And this was just a small software company that he happened to own.
Okay. So when it comes to your partner, especially in the early days before going into all this, what are your strengths? What are your weaknesses? And same about your partner. And what made you decide that, okay, let's do it together, number one. And number two, did you always had this plan of acquiring multiple companies, or you just had this idea of, okay, let's buy this and let's buy this one business and let's grow it?
Yeah, so we had worked together for a couple of years at this venture capital fund, and we were basically starting companies through that process and talking about investments. And so we go to Chipotle together like once a week and just kind of talk on things. And then after a period of time, we decided to spin out and do it together. And we had already been working together for quite a while. And it's super complementary skill sets. So I'd say we have similar mindsets, and his skill sets are tech and product. And he's more business savvy than the average developer for sure. And then my skill sets are more marketing, growth, finance, the business side of things.
And what about the first investment? How did it go? And when did you decide that okay, it's time to acquire another business and actually build a holding company of SaaS companies?
Yes, we completely went through the full life cycle of it. We sold it earlier this year. It went great. We 4 to 5x'd our cash on cash money, which is awesome. Yeah, some pushback we had is like, you could buy these things, but can you sell these things? So it's nice to go the full life cycle of it. So we ended up buying 3 software companies. So we bought the first one, and my recommendation to people is like, you could have a holdco plan, but just do one great deal. And then from that, you could earn the right to do more deals. So we bought 2 more, a database backups company, and then after that, it's business management for pet care businesses. So dog walking, dog walkers, dog training. It's kind of like everything you need to run that. And so we bought, I would say maybe smaller than we would have liked. And that was kind of a learning in the early days, is don't buy too small. So every business that we've done, after has been larger and larger. And now we have a minimum of, we don't really look at anything under $1 million in ARR. it's not really worth the time. It's about the same amount of work to do something bigger, and it comes with a better team and it's more like established processes.
And how is it now when you acquire a business? How is the process post acquisition? Who runs the business, and how is it all working for you?
We've been evolving on this. To date, the way we've done it is we kind of do it in seasons of sorts. So between me and my partner Brent, we could kind of do everything in a business. So we effectively, the founders, the average profile has been doing it for 5 to 7 years. They're pretty burnt out. They want to go do something else. So we do a pretty quick transition. We take over everything and we get everything stable within like 30 days generally. And then we have our process of like basically a checklist of 100 things that we try to implement to improve stuff. And I wish you could say, just add sales and marketing and everything's amazing. The reality with software is it normally takes a good amount of product work for like 6 months to get stuff in a good position to grow. And so that's roughly our process. Other folks, and where we want to go more is that they're really good at like Indiana Jonesing it, where the previous CEO steps away and you have a new CEO that you just swap in real quick. We haven't done that. So we generally do a bunch of work for like 6 months and then hand it over to someone else.
What are the typical things you do or change in the first 30 days? Let's say today is day one. What do you do?
Day one, we just got it. It's the first 30 days are mostly focused on transitioning things and making sure the tech and everything is stable. After it's all transitioned and we kind of have a good handle of it. I used to run large like paid ad campaigns. So often I'll throw a lot of paid traffic at it that I know is high intent. And then from there, you can kind of see in the funnel where things are breaking down, which turns out it's almost always, a number of things. So you try to fix up those broken spots. That's a big part of it. And then investing in SEO, optimizing pricing. So if they haven't raised prices in a while, you raise prices, you offer different tiers. Yeah, it's, I would say there's a lot of low hanging fruit in these like, smaller software companies. They aren't optimized. They're doing, kind of the basic best practices.
And these things you already know once you do the due diligence, right? I mean, you've been keeping an eye on this business for some time, and you already have a step-by-step plan on exactly what you're going to do once you acquire it.
Yeah, so we have a number of meetings with the founders and you learn more and more about the business. And I have just effectively a running list of like, this is kind of the low-hanging fruit. These are the first things I'm going to do when we take over. Then you just work your way down the list over time.
Mm-hmm. What about the current portfolio? How much you can share, and what are the characteristics of the companies you're looking for at this stage?
So we are much more fluid than maybe our website makes you believe. So it kind of fall into two buckets. We do bootstrap, profitable companies. Those are far easier deals. That's what we've done mostly to date. And then we look at a lot of these venture orphans. So people that raise venture capital and either are rocketing out of business or they just have fallen off that path. They're not growing fast enough to continue raising that money, and offering like a calm landing place for those. And with that, we're not only doing software, really. We are looking at like a bunch of marketplaces recently that have been pretty interesting. Not just software. And then I also, we came from the studio world. I spun up Jules, which is a Latin American staffing and recruiting company. So it's more services as well. So not just software.
How much has your vision changed over the years when going through this journey of running a holding company?
It's become more fluid for sure. I think we came in thinking we'll just be Constellation Software. We're going to do like a mini Constellation, and we may still pursue that down the line. But the best deals we've seen don't fit in that box perfectly, and we haven't pursued just choosing aging software companies. So just kind of taking the interesting opportunities as they come.
I've heard a lot, and when you read the Twitter as well, there is tons of people having this dream and goal of building this Constellation software and following this model pretty much. Same in USA, same in Europe, and you've done a research on him. So I guess it's been so much harder to actually do it when just talking about this, obviously. So what has been your experience? And you said you maybe changed a bit your goal of building this.
So you could definitely still do it, and many people are. And Constellation has seen a lot more competition because a lot of people have learned from what they built. They built So for people that maybe don't know, they own 600 plus vertical market software companies. They have a database of like 50,000. So they basically have a database of everyone to ever exist. I know they've had 2 of our 3 acquisitions in their database because I talk with the guys over there periodically, and they're very much organized into like fiefdoms. So everyone is, if you talk to a prospect in the last 6 months, that's yours. If you stop talking to them, it's a free for all and anyone else could grab them. So there's a lot of like competition within the company. So why not just do exactly that? It's not super fun to just rip out the cost structure and run things purely for cash flow. They don't really invest in growth that much. So I would say we invest in generally higher quality businesses or buying higher quality businesses and looking for more growth. And it's more fun to operate that way than just like, hey, can we just harvest cash flow and hold this for the next couple decades as it declines over time?
You mentioned looking for higher quality businesses. How much time are you spending on deal flow these days, and how hard it is actually to find those businesses, and how many you think you can do per year, for example?
So through the content and everything, I built pretty good like inbound. And so I don't focus on outbound as much. We kind of do it in waves. If there's some reason we like some, market segment, I'll do outbound specifically to those companies. But we've had a number of deals fall through that were really promising recently, and I spent a lot of time on. So I haven't been focused on it as much. I'm kind of letting the interesting deals come to us. So we don't have any pressure to deploy capital, and it's been kind of fun just to focus on our current companies and growing them, and waiting for a great deal to come through.
What is the so-called perfect acquisition for Verb?
Perfect would be like a growing vertical market software company. It would be amazing if it was a venture orphan that raised a boatload of money and we could pick it up for just buying out the debt and bribing the founders. That would be a great, but those are tough deals to pull off. So otherwise, it's like a bootstrap profitable, fairly simple deal that we're excited about.
And how much debt are you using yourself when doing those deals?
That has been harder to make work recently. We used to use basically as much as we can, which is maybe a learning of don't do that. It makes running the businesses harder if you're always worried about paying off debt. But now we've used a little debt and more so seller financing. I think you had questions around like, what's the market like nowadays? And often the founders are still kind of glued to this number that they have in their head, but they've softened on like the terms that they'll let you use to get there. So you could generally play around with seller financing and do more of that and get them to like their higher number that they still want to get to.
What red flags do you look for? Maybe like looking at different deals, what have been the red flags and the reasons why you haven't made a decision? And is it always been the price or the traction on the market, or has there been anything else?
Price is the hardest one. If they're really glued to some unrealistic number, I've had no luck convincing an adult to change their mind. So I explain my reasoning, I explain what the market is, and often that just takes time to get them to soften. The biggest red flags are always around trust. If there's any answer that I think is kind of fishy or I don't trust them on. The reality is we're doing our own diligence, which is fairly straightforward on these, but you could probably get something over on me. I'm not going to deploy an army of consultants on you. So if there's anything that I think is fishy, I wouldn't do it with my own money, and I certainly can't do it with other people's money. So we walk away if there's anything red flaggy there.
And can you discuss the importance of diversification in your investment portfolio, and how much are you looking at this these days?
So this is something I struggle with. I don't know if we should be doing this holdco route and diversifying, or if we should. So the folks that I'm friends with that have had the most, outsized success, they normally find some business, and it could be something pretty random that's working, and they just run with it, and they take it as far as they can go, and they just continue to compound it. And those are the ones that have resulted in outsized success. So I don't know if we should be indexing across things and doing multiple businesses, or we should just focus on the one and grow. We've ended up at some kind of hybrid. So we bought 3 software companies. We've sold the first, we're selling the second, and we're focusing on like the one winner, which is Scout, this pet care management software. And then I have this other one, the recruiting company as well. And so I don't know if we should just settle on one and grow. I'd say many of the holdco companies that you look up to today, Andrew Wilkinson in Tiny is one example. You see it today and they own 40 plus companies, but the way it started was, Meta Lab was just producing millions in cash flow at a pretty early stage. And they compounded that for a period of time. And then they had this, huge pile of money. And then they, from there, diversified and bought other companies. So I don't know if that's a better approach, if we should do that, or if we should continue indexing and buying a variety of things.
When doing research on Verve and what you're building on your website, you say that let people work. We buy great businesses, match them with great leaders, and then leave them alone to do the great work. This is everyone's dream scenario. How has it been working in real life and in your experience?
We're far more involved than we'd like to be, for sure, on the businesses. I talked at the start that we, are the operators in the early stages. Over time, we'll move away from that. Yeah, it's a dream that you just add sales and marketing, you hire an operator, and things run. The reality of owning multiple businesses is, things are always breaking. There's always people issues. People, go take other jobs. You have to replace them. It's basically just hiring folks all the time.
And can you share maybe some investments you've made which didn't go as you planned? How were the reality and expectations different? And maybe you can share what did you learn and what should you have done differently?
The biggest thing in software, I think, is that things always take longer than you want them to. So you have these great ideas for product improvements or something like that. And you start improving them and you realize oh, this is actually broken in these 3 places. This has to be fixed first. So we've never lost money on a deal. I don't think we ever will, mostly because we have the skill sets to improve stuff and there's low hanging fruit there. But the mistakes have been on time spent, as far as you buy something and it's actually a lot more work than anticipated to get it in a position for growth.
And when it comes to those growing those portfolio companies, this Betcare software company, for example, do you prefer to grow it organically or via M&A?
That one has been all organic. SEO has been by far our largest driver, and fixing low-hanging fruit, optimizing pricing, that was big as well. But yeah, besides that, it just has compounded over time. You get more businesses on the platform, and then those businesses also grow because it's in a growing market, and that's been great for us. The other kind of unique thing there is we launched a growth service. So these people are good at dog walking and dog training and that kind of thing. They're not great at running a business, which is why we have the software to try to make it as easy as possible. And then we also added a marketing agency to the side of it, which helps them get leads. And then from there, that also grows our software revenue as well.
I still want to talk a little bit about finding operators to run the businesses. What about you? How do you identify and evaluate those potential operators to run those portfolio companies, and who you think are the best operators?
This is the big value of having an audience. So the best ones have come from referrals, from inbound. You tweet it out, you get some good, interesting people for sure. We're not posting to Indeed or something like that, or LinkedIn. And that is just through the network. If these things are smaller, we'll get them fairly junior and kind of train them up in the business and then grow from there. One thing that's a little independent of this is with the Latin American staffing company, I do wonder if you could do this at a much cheaper level of hiring folks in Latin America. So you can just have a little idea. You have a few folks you hire for $1,500 a month each. And can you experiment as a studio in a way cheaper fashion than you could have ever before? Overseas labor and AI, I think that combo is pretty interesting nowadays.
Now, a bit more personal question. You've experienced a lot while building the portfolio, buying businesses, selling businesses, growing businesses. There's often a lot of pressure involved. So how do you handle the pressure when it comes to doing all this?
I have always enjoyed it. I don't know. I kind of rephrased it. I don't think of it as pressure. It's almost like if you just tell yourself you're excited instead of stressed, you feel more of that. I'm pretty dialed in physically. I make sure I sleep as well as I can every night. I exercise effectively every day. Played sports growing up. Play basketball or tennis or weightlift almost every day of the week. So if you get that stuff under control, I don't know, you're kind of excited to deal with the pressures of the day. If you don't sleep and your body isn't happy with you, I think that stuff can overwhelm you easier for sure.
Okay, I want to talk a little bit about the mentors because you do a lot of research on great people, great entrepreneurs, holdco builders, and you're doing excellent research, and thousands of people are reading it, myself included. So, if we can go one by one. And starting, I have a list of 4 people here: Andrew Wilkinson, Mark Leonard, and Jay and Robert Pritzker from Marmon Group. If we're starting from Andrew Wilkinson, what have you learned from him doing the research?
I think is a larger thing of like, I didn't walk up to these people and be like, hey, can you be my mentor? As half of them are dead, so that doesn't work. So it's kind of like building my own mentors or permissionless mentors. So I highly recommend other people do this and just study or consume everything that these people produce if you want to be like them and take what you can from them. Andrew is remarkably good at delegation, one of the best there is, and pushing things down. As soon as something comes to him, he pushes it to someone else. He still does this today. If you ever interact with him, he pushes you off to someone else, which is pretty funny. That's probably the biggest thing I've learned from him is just be amazing at delegation. Mark Leonard built an amazing acquisition machine, effectively, a decentralized organism of sorts. So that is huge. If you were to try to recreate Constellation today, I'd say buy one amazing business and then build this like outbound machine, which is what he has. The Pritzkers, they bought kind of unsexy businesses and rolled them up. The kind of unique thing there is one of them was a lawyer and was a famously good deal maker. And so he could basically close deals in like a day. So moving fast with cash in hand is super effective for sure, even today.
Now, you've attended to Capital Camp many, many times. I haven't. I've read a bit about it. So I would like to know, why are you going back there every single year?
Well, going back, it becomes more of like a reunion. So we do all this stuff online. You kind of scale conversations that way, but there's nothing like a meeting belly to belly, as some people say, and having beers with folks, hanging out all day, talking, random interactions. So it's effectively like a rural wedding or rural camp with 300 interesting people that they've done a great job vetting. So it's in Columbia, Missouri. It's put on by these guys, Brent Beshore and Patrick O'Shaughnessy. It started with just their friends, and then it kind of became friends of friends and has capped out at around 300 people now. And you just do cool activities. So like you play tennis with the Mizzou girls tennis team. That's always fun. You go shooting with like Navy SEALs. You get to sign up for different small group discussions. So it's not like a traditional conference where you sit in a dark room and stare at some speaker on stage. It's more like everyone there could give an awesome speech, and you just meet and hang out with people for 3 to 5 days. But yeah, that's I've gone a few times now. It's always great. It's always hard to get away for a week, so I'm not sure I'll make it every year. But yeah, highly recommend it if you're considering it.
And every year you wrote the summary. That's why I know you keep going there. So what have maybe been some of the lessons from those conversations there? Because it's, again, you mentioned it's in person. You're having this conversation while maybe resting after a set of tennis. And what have you learned maybe from Brent himself and Patrick O'Shaughnessy himself?
From Brent specifically, the power of content. So he produces a lot of really great content for small businesses and small business acquisitions. His whole team, who I've hung out with most of them, they're very literary. They're not like traditional finance people. They have kind of weird backgrounds. And I think that has been super fruitful for them for building out like a talent pipeline for running companies and also getting access to interesting deals that no one else is looking at. So they bought like a high-end matchmaking service, or I think the largest producer of Ferris wheels or something along those lines, roller coasters. Patrick, I don't know Patrick as well. He is really good at focusing on what matters and like not doing anything else. So he gets invited to stuff, or you offer to make an intro to him, and he'll just say no, and he won't even give an explanation, which I always thought was kind of awesome. Yeah, he's just focused on what matters to him and his business, and is like dialed in on that. And he's pretty good at saying no to other things that don't matter quite as much.
Okay, so you spent I don't know how much, but you spend time so-called building in public. So what have been the benefits? What are you struggling the most when handling and managing it all? And what are the upsides and what are the downsides of doing it?
So the biggest benefits is you basically scaling conversations. So I do all this writing, I write it once, and then people read it. Thousands of people, hundreds of thousands of people over time continue to read it, and they feel like they know you. You build up trust over years. It's super useful if down the line someone wants to sell business to you. I think we've won effectively every deal. We weren't the highest price, but people liked us and people read our writing or listened to our podcast, and that was super successful in closing a deal. Or starting this recruiting company. People have trusted me for years. It's something that my friends needed, so that's been fun and like very easy to do when you have people that trust you already. Downsides: when a tweet gets outside our little bubble of small business or software or finance, that little world on Twitter, and gets to the greater outside world, you get hate for sure. So I don't have Twitter on my phone, so I don't find it as distracting. And if a tweet blows up, you should probably mute it and not look at Twitter for a period of time. Those are the only downsides. It's like inevitable that you get some hate as things get more popular.
What motivates you today, and what do you want to accomplish next?
Probably just doing more of the same, building cool stuff with great people. I keep going back. Jules is what I've been focusing on most recently, this recruiting company in Latin America. And a lot of my friends are customers, and it's been transformative for their businesses of like hiring a bunch of people in Latin America, and they've been able to grow from that. So that's been super fun. And it's like motivating every day to help small businesses and help friends that I see, on a weekly basis, improve their businesses. So that's been cool. Otherwise, I want to get back to writing more. I used to be really good before my son was born of like writing for an hour every morning, but now he wakes up, pops up, and we're going to go play like hitting a ball back and forth in the kitchen or throwing a ball in the laundry machine. And so my usual writing habit has not recovered in like a year and a half since he's been around. So I have to get back to that and figuring out time to do that kind of thing.
Okay. I always like to ask the question, how has entrepreneurship and building this holding company Verve changed your life and changed your family life?
As long as as soon as you get the basics covered, you live in a nice place, nice walkable neighborhood in a good city, you have a safe car. It doesn't change dramatically. I'd say freedom is probably the biggest thing. I could go to the park or go to the pool like in the middle of the day. I don't have to look at my phone. We don't really have emergencies in our companies, or at least someone else should probably handle them. So freedom to do what you kind of want and spend time kind of how you want is probably the biggest thing.
Okay, let's wrap up with the famous five. How old are you?
35.
Favorite book?
I read a lot, so I don't have a great answer for that. I mean, I could list out a bunch of books. If someone wants to get back into reading and hasn't been reading in a while, American Kingpin is kind of my go-to. So it's a story of the Silk Road, and it's written in a really engaging fashion. And the Silk Road was basically an Amazon for illicit drugs and other things. It's like building a marketplace or a venture capital-backed company, but you don't have any capital and everything you're doing is illegal. So it's a really fun entrepreneurial story. How to Get Rich by Felix Dennis is another good one. I'm reading again. I just got Brunello Cucinelli's book, which is super hard to track down, Dream of Solomeo. So he's another, kind of awesome guy that I look up to. But he built one company. It's he's a billionaire based in the middle of Italy. And he transformed his kind of rural town into this like beautiful classical Disneyland. So that's been a recent one. Not that I wouldn't recommend it as an amazing book. It's just something I just finished.
Married, single, kids?
I'm married, one kid right now.
What car do you drive?
These are funny questions. A Tesla Model X, which is basically an electric minivan. Highly recommend it if you're taller and have kids. The way the doors open, it's so much easier to put a kid into a car seat instead of like bopping their head or bopping your head in a normal door. So that's been awesome.
What's the best investment advice you've ever got?
It's cliche, but just the power of compounding, learning every day, growing something every day, it just adds up over time. So yeah, letting the major things compound over time is probably the best advice.
Okay, last one. Where can people find you?
Twitter, although I don't have my phone anymore, so I won't be as responsive. But if you DM me, I will get back to you. So Colin Keeley on there, or colinkeeley.com if you want to check out my writing.
Okay, awesome. That went quick. Thanks a lot for doing this.
Yeah, you bet. Thanks for having me. Good to chat.